Hey everyone, today we're talking about becoming noteworthy, business incorporation and cash flow setup. I know one of the toughest things about being a business owner is thinking about what type of corporation am I going to set up and how am I going to manage the finances. I've seen that most business owners are really good at whatever sort of business or field that they want to get into. A plumber might be great at plumbing, an electrician really good at doing that. But when it comes to behind the scenes, managing the books and payroll and all that sort of stuff, that's where most businesses fail. Obviously, we know basically only 1 out of 10 businesses make it past 5 years. So what I want to talk about today, just give you a couple tips on becoming noteworthy and managing your business in an effective and smart way. First of all, one of the first things I wanted to talk about is an LLC, Limited Liability Corporation. Well, what does that mean? Essentially means any and all partners of the LLC are going to have limited liability in terms of what they've put into the entity and what they could have to be responsible for if there was any sort of problems or issues. So if you invested $5,000 and there was an issue that caused some sort of an expense or lawsuit, all that you're going to be held liable for is that percentage of the business that you put in. So it's something to really think about in terms of like if you were to own an apartment. If you own several apartments and something happened and you were getting sued, that person might be able to sue for all of the assets of all of the apartments under one entity. Well, if you did an apartment under an LLC and each area or each apartment had its own LLC, you would only be liable for each apartment. Does that make sense? Another one to consider is an S Corp. So this is where you could have multiple entities under one business, and all of that does a pass-through or flow-through to the individual owner's taxes. So why this is helpful, actually the current president actually did this with some of his bankruptcies. So for example, one of his companies went bankrupt. He was able to write off that loss against the profits on his other entities for basically about 20 years. So it was totally legal. Whether or not you believe it's ideal, it worked. It worked for him and it helped him grow his millions and billions. So it's something that you can consider as a business owner. If you might have multiple different types of entities or businesses, maybe you put that all under an S Corp, and then you're able to flow all of that through one tax report. Last one to think about is the C Corp. If you're going to set up a company and incorporate under a C Corporation, there's going to be a lot more issues or responsibilities that you're going to have to keep track of when it comes to taxes, shareholders, reporting. That's great. As companies get bigger, sometimes they go from an LLC to a C Corp. If you're going to start at that point, though, you want to make sure that you're working with an accountant and an attorney on any and all of these types of entities so that you know, hey, this is going to be the best entity for me and my business and operations. Now, what I want to make sure we talk about is a book called Profit First. Fantastic book. I'm not a Profit First professional yet. I hope to be someday. But in terms of the Profit First accounting and management, I really think it's a great strategy for business owners. What the author says is put your profit first. So you have a revenue account. The next thing, you take a certain percentage of your proceeds and you put it into profit. I think it's a great way to make sure that your business shows a profit no matter what. If things are going up or down, you just take a percentage of all sales, put it right into profit. Next one, owner's compensation. And in my personal practice, I've even included this as like a payroll/owner's compensation. So paying our employees and our household under a payroll system like a W-2, we just put it all in that bucket and make sure that we cover that every month. Next one is taxes. We're making sure that we cover our taxes. Obviously, as a business, you have to make sure that you're filing quarterly taxes and making sure you pay your state taxes. So if you have a separate bucket, a whole separate account for your taxes, you're now keeping track of that and you're being very thoughtful. The author even goes so far as to say, send it to another account at a different bank to make sure you don't cheat and kind of steal from it. The last thing is operating expenses. The author, Mike Michalowicz, the whole reason he set this up was that he wanted to be able to drive down operating expenses. So if now you've accounted for a percentage in those other buckets, now you've got maybe 50% left in your operating expense bucket, you're going to strive to drive down your expenses as much as possible every month. So recapping that: revenue, profit, owner's compensation, taxes, and operating expenses. And again, just to recap everything, making sure you're working with an accountant, maybe a bookkeeper, if they do both, and an attorney to make sure that your business is set up for success.